Good morning, traders. It's the 10th of January. We are Signal Centre Talking Bull. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, very well, thanks. How are you?
Yeah, not too bad. Thank you very much. Okay, let's get straight into it then, shall we? Let's take a look at the headlines that have been moving markets over the past 24 hours, and then we'll get stuck into some charts, have a look at the latest price action, and see if we can set ourselves up for the day ahead. So, first up, the Eurozone confidence improves further. The Eurozone Centix Investor Confidence Index improved to minus 17.5 for January from minus 21 in the previous month, and that was slightly stronger than the consensus forecast of minus 18. Centix added that the end of restrictive corona measures in China is generating hopes of better times ahead. The Fed yesterday, we saw some more hawkish rhetoric there. The San Francisco Fed President Daly stated that there had been no evidence that core inflation outside housing had shown signs of coming down and that it's too soon to declare victory and stop rate hikes. She added that it was reasonable for rates to increase to 5.25 to 5.5% and that a hike of 25 or 50 basis points was realistic for the February meeting. Yields edged lower as a result of this hawkish rhetoric. We saw them drift to around 3.55% on the US 10-year, while markets are pricing in a further 75% chance that the February rate hike increase will be held at 0.25%. The dollar continued to lose ground yesterday as well, recovering slightly from its intraday lows after the Fed commentary, but still posted further net losses on the day and closed below a key support level, which we'll come on to in a bit. So the dollar index did hit a 7-month low amid expectations of slower inflation would trigger a Fed pivot. In England or the UK, the Bank of England pill frets over stubborn inflation. The Bank of England chief economist stated that domestic factors could make UK inflation more persistent, with risks for higher natural gas prices, adverse labour developments, and bottlenecks in goods sectors. He added that a risk of a second round inflation effects remain, although he noted that supply disruptions appear to have eased. And we've had some mixed Norwegian inflation data. The headline data coming out from Norway saw the rate retreat to 5.9% from 6.5%, but below expectations of 6.1%. But the core rate edged slightly higher to 5.8% from 5.7%. So that's that for the latest headlines. Let's get stuck into some charts, Steve. Is that crypto rally still going in the right direction? Any signs of that reversing? What are you seeing, Steve, on the charts?
Yeah, just take a look at Bitcoin. It's there's a steady little push higher, but nothing to really write home about, Joe. I'll be pretty disappointed overall if I was holding this. But we've seen, I suppose, since the end of the year, start of this year, we've seen a nice steady move higher. But if you sort of think about it on the larger, in the bigger picture, it's not really doing a great deal. Yesterday's candle wasn't very good, although it was positive, opened and closed higher than where it opened. It did have a spike higher, all the way up to just under 17,400, and then reverse sharply lower. That's a shooting star candle, so it's not really what you want to see when you're holding this long. So again, I think we've said before that this Bitcoin is a bit more of a risk asset. So if the stock market continues to rally, you'll probably get a little bit of flow into here. But the major levels are miles away, all the way up to 18,400. So although that's 1,000 points higher than yesterday's high, we've got plenty of resistance in between. So I wouldn't hang my hat on anything to do with Bitcoin or crypto for that matter. XRP, similar sort of candle yesterday, a bit of a shooting star type candle. Ethereum, a little bit more constructive. We're above the 100-day moving average in Ethereum, so that's quite positive. We still have resistance up at 13.53, yeah. So overall, very muted in terms of what crypto's potential is. Take a look at the daily chart in gold. We had another push higher yesterday, nice move up to 1881.5, but that stalled and reversed sharply. So we've got another shooting star candle. So this is a sign, maybe after this rally, it's a sign of a little bit of a limit to the upside. We still have major resistance up at between 1900 and 19,000 and sorry, I was right, 1900 and 1905. And we took out the 13th of June, which was last year's swing high before the sell-off. Took out that high yesterday, so that's a positive. But there's still, if you look back on the chart, you can still see plenty of work to do to push above this level. So we are in an inverse head and shoulders formation. We've sort of like we also called it a double bottom formation. It's like a double head, and we've hit the measured move target of that. That was at 1844, pushed higher. So sitting nicely above there. But the measured move target for the inverse head and shoulders formation is way higher at 1966, which was a great year for some football fans. Silver is similar sort of price action, although it seemed to stall yesterday. Again, we've got shooting star type candles, so it feels like this rally is really struggling and needs a little bit more influence or sort of like a little bit more of a press to the upside if we're going to continue. We've got a golden cross on silver, so that's positive. We haven't got that in gold. And silver is like notoriously the sort of like the poor brother of gold, and seems to sort of like get the moves a little bit later. So yeah, measured move target for that inverse head and shoulders formation just below $25, but we're stalling well in front of that, 23.50 trading at the moment. Copper has held above the break level, which was at 396. We haven't seen levels like this since June last year, so looking quite positive. We've had 3 really solid positive days in copper, and although we're on a little bit of a back foot this morning, no real reason for that to slow down really. It's broken through the major resistance level. Obviously we got I suppose we do have a swing low here, which might cause a little bit of an issue. From a Fibonacci perspective, I suppose we're not far away from the 50%, which I haven't got in this chart. Let's stick it in there. 50% comes in at just above $4.08. But $4.30 for me is the major resistance, and after breaking through the 396 level and staying above $4, I would expect a sort of like an attempt at least. And again, we're crossing over. It looks like a golden cross on copper as well. Should sort of hit us within maybe by the end of the week, maybe. Sorry, just letting one of the dogs in. He's missing what I'm talking about. He likes copper. He trades it all the time. Crude oil, that had a slightly positive day yesterday. We are trading around support levels. We've posted a higher low recently. That was last week, and moved up from there. But giving up yesterday's gains already this morning, trading at 74.20. There's a lot sort of going on in the crude space, and it still remains under pressure. All below the price action is all below the main moving average levels on the daily chart, and really got to look at looking around $72.50 and then $70.25 as the next support levels in this. Price action stalled at the 55-day moving average last swing high. That's coming in around about $80 at the moment. Trading about just under a $5 premium to WTI crude oil is the Brent crude oil. Same sort of price action yesterday. Spikes higher, but they're being sold into. So still feels under pressure. So I know they're talking about natural gas oil prices being a key factor, but we don't seem to be seeing it at the moment. Talking about natural gas, this was a gun to head trade idea yesterday. We'll talk about that in a minute. We are trading around a significant support level, and yesterday's price action for a moment looked like we could form a really nice bottom formation, a morning star formation. However, the afternoon price action or later price action failed to break above the 395 area and retrace lower, trading at 358 at the moment. We've got the low of this year trading at well around about 345, but this major support going all the way back here. If we do break below there, Joe, it looks like sayonara, baby. We could be well be on our way down to this measured move target of the head and shoulders formation, which is all the way down at 135. Who'd have Adam and Eved it? We'd be able to sort of afford our energy bills then if we get down
Just
there.
when we don't need them, when it's turning spring.
Yeah, I mean, obviously the winter hasn't been as harsh as everyone was expecting. Obviously, sort of like weather manipulation has gone on, and we've been saved. Right.
Conspiracies.
Yeah, of course. Yeah, we need to see really what's going on with the dollar, Joe, to sort of like get more of an idea maybe where these commodities are going.
Yeah, absolutely. Let's do that. Let's take a look at the US dollar. So as you mentioned in the headlines, we saw dollar retreat taking out some pretty key support levels in the process. So I was of the opinion that we were forming some sort of wedge here. I had this drawn on the chart, which I've now just taken off because it's been invalidated. Some sort of wedge formation here. We saw the breakout on the 5th of January. Looked as though prices may continue to move to the upside and undo some of these losses that we've seen in recent months. But yesterday we made a new low. We took out the support that was at 103.45. We closed below it and we're still below it. So I expect any retest of this level, maybe as high as 103.88, to prevent any gains in the short term, and therefore we can start looking again for lower prices. We do have this 50% fib level on the charts. That's at 102.15. So for me, that would be an interesting level to see if there is any support at all for the US dollar. And then if we can't hold that level, we could be eyeing up a move down to this 61.8% fib level at 99.17. Of course, I expect there to be some form of support around the big round number at 100. So we need to keep that in mind as well. But certainly the US dollar is under pressure. We can see that we've got this head and shoulders top pattern, and simply this move higher that we saw was pretty much a move into the neckline of that pattern before the seller stepped in to drive prices lower. So dollar still under pressure, still looking for lower prices here. And if we take a look at euro US dollar, what we saw yesterday was a break to not quite new highs. Did we hit new highs? Yes, we did hit new highs on an intraday basis, but closed below it. So maybe what we have here is a bullish flag formation. So we can see the flag pole, if you like, the move higher following the break of this bearish channel. We've seen some consolidation, and this looks to be a continuation pattern, and we can expect to see higher prices. The 50% fib level is the natural target that I'll be looking for on the upside here. That's at 109.42. So looking pretty strong there. Any pullbacks on euro US dollar, I believe, will be limited to around 106.50 and could present decent opportunities to buy in expectation of a move higher towards this level. Let's take a look at cable. We can see here that we posted this bullish outside candle on Friday. Prices continue to move higher yesterday. So maybe another situation where we are forming a continuation pattern here on cable. Prices look to be moving to the upside. Obviously, we'd like to see these highs from December taken out. They're at 124.30. This was a resistance level that did a pretty good job at capping the upside, but this looks to be a reasonable continuation pattern, and we can start looking for higher prices. Initially looking for a retest of this high at 124.30. If we can get above that, then we'll be looking to eye the 61.8% fib level, which is at 127.57. Let's take a look at dollar yen, see what's happening there. This still is contained within this bearish channel, so still looking for lower prices. We got this bearish outside day candle that was formed on Friday. Prices yesterday formed a doji, holding this major support level between 130.56 to 131.50. And while we're above that, there is potential, I guess, for a break to the upside outside of this channel to see some sort of correction. So these two are just kind of fighting it out really for who's the weakest at the moment. But this is a pretty crucial zone of support here, so I would be keeping watch of that for now. Let's take a look at some of the commodity currencies. Let's take a look at Aussie versus the US dollar. We can see that's into a cluster of resistance levels here. We had a previous high from the highs that we posted in December. We've also got a 50% fib level, which has contained prices for now, but we did see a close above the highs that we posted in December and a small pullback this morning to retest that. So it'd be interesting to see if it's got the legs to continue moving higher towards this previous resistance up here that we saw in August at 71.36. And if we take a look at New Zealand dollar versus the US dollar, we can see this was trading within a pretty impressive bullish channel, but we've seen prices break from that, but hold support around 62.30. So expecting prices to remain range bound up towards this resistance here at 64.65. So we've got a couple of requests to take a look at some FX markets. Going to look at CAD yen and sterling yen. If there's any other requests, feel free to post them up, guys, and we'll do our best to cover them. So let's start with Canadian dollar versus the Japanese yen. So we saw this big move to the downside on the yen currencies. So, yen strength we saw. So this affected obviously a number of markets. What we seem to have here on Canadian dollar versus the Japanese yen is a pretty large top pattern that confirmed on that impulsive move lower that we posted on the 1st of December. We then saw some consolidation followed by a fresh move lower. So that was a continuation pattern that we saw there. If we take a look at the overall target on the daily for this market, we've got a big top pattern which we can measure, and that gives us a target down at these levels here, which is at 92.24. So that is also a 50% Fibonacci retracement level of this entire move that started back in March 2020. So that's a pretty important level. And we can see here it was some previous highs, which were then broke through. So that should act as support when retested. So I am looking overall for lower levels on the Canadian dollar versus the Japanese yen. We've got some short-term resistance here at 99.26. Let's take a quick look at the intraday charts. We can see here prices are moving quite sideways. I've got a volume profile on here as well. This is the last 20 days worth of price action, and we can see that there is volume building around here. So potentially forming some sort of top, unless we can break through this resistance at 99.30. If we do start to see evidence of this breaking down, then we may see there's a big vacuum here. You can see where there's not much trade that's taken place. So we could see prices dip quite sharply down to this kind of region around 96.33 in the short term. But overall, my bias is bearish on this, given that we've got this large top pattern on the daily chart, as highlighted here. Let's take a look at sterling yen. We can see here that prices were range bound for a period of time before eventually breaking down through 163.06. We had a measured move target of this range projected lower, which came in at 157.00, which we pretty much, well, we definitely hit to hit that target very nicely before then seeing a sharp reversal. Ultimately, I still think lower prices will be seen, but this is a pretty choppy market at the moment. I'd be looking for a retest of this level here at 163.10 to potentially get some shorts on, expecting to see lower levels. Anything on the daily, on the intraday charts, just take a quick look. Volume built around this kind of area here before then heading higher. Maybe got some more upside potential in this in the very short term. If we take a look, we may be forming some sort of continuation pattern here, maybe some sort of flag. If we get a break to the upside from this, then we may see prices continue to head higher, eventually towards that target that we've got at 163.00 to 163.10, which would be on the daily chart a pretty good level to consider getting short. As we can see here, we've got this previous low on the 60-minute chart, which may act as resistance. But also we can't rule out the fact that this may be forming some sort of bottom. So it's quite a mixed picture, I think, on that market at the moment. Was that it for the requests? Let's have a quick look.
Yeah, I think that's it.
Okay, perfect. So leave it there. Steve, you can run us through some indices.
Yeah, we'll take a look now at the indices. So FTSE is broke above the resistance level, which was the high from last year, and we posted a new high, new multi-year high. We didn't quite get. Let's see if we did actually break the July 2019 high. We did. We poked our head above it, 77.30, but we have reversed pretty sharply from there. So really need confirmation of that break and a close above that 77.30 level. Otherwise, we could see FTSE coming under a little bit of pressure. It's had a really nice rally out of all the indices. I think this has been, apart from maybe China, this has been and Hang Seng, this has been one of the most one of the best rallies in the indice sphere. DAX didn't quite get to those sort of heady heights. It didn't take out last March's swing high and formed a doji candle within this resistance area. So the rally seems to have stalled ever so slightly, and we got to watch this really, see whether we get a break above or below this doji today, and a close either way would sort of like be quite significant and maybe lead to the next move or trend, intraday trend. CAC, very clear doji candle spinning top at the top of the market. So again, on the back foot this morning, a break, if we do get a break of yesterday's low, 68.48, around about there, then that would open up the downside. The US markets didn't really, I mean, they had a decent rally yesterday. I'm not taking that away from them, but they ran into selling pressure. We got above the 61.8% fib retracement. Remember the golden crosses, so potentially we're in, we have formed a bit of a bottom overall, and but shooting star candle doesn't look great on the Dow. Stalled around about the 33,930. I think we shorted that yesterday on our intraday trade ideas and managed not to get stopped out. I think the stop was about 20 points higher than the high, so that was good, and it reversed really aggressively and closed on side. Nasdaq as well, shooting star candle. This obviously has really underperformed the Nasdaq. It's all the tech sector, and hasn't even got above the major moving averages, the 55, 100, and 200. So really, we could have stuck a little top in on a Monday price action, and you know what happens on Tuesday? Turnaround Tuesday. So this could be leading to, my favorite is selling indices. So I'm thinking about my gun to head trade idea already. Price action on the S&P, we got up to 3,952. 4,000, obviously the big level. We've got the 200-day moving average coming in at 39.75, all below the downward trending resistance line. So a little bit of a stall here. Will we get that complete reversal and a little bit of an evening star formation forming with a move back towards the 3,800 level? We will see. Bearish day yesterday as well, after a really decent day from last Friday's non-farm payroll, the Aussie 200. That stalled, made a new high, stalled and reversed into Friday's price action. China 50 looks good, but it's stalling around about the 61.8% fib. Again, doji candles at the moment, so be aware of that. Could get a little bit of a turnaround already, it feels, and we're only sort of like starting the year off. And doji candles as well on the Hang Seng. Nikkei shooting star candle, and that's hasn't had the rally that we were expecting to follow with the China and Hang Seng. We got a crossover on the 55-day moving average. Yeah, we are with price action below all the moving averages. And we looks like we're trying to cross back up through the 100-day moving average, the 55-day moving average, but it's stalled, and could sort of indicate again that the momentum isn't quite there in the indices. So overall, yeah, not a great Monday.
Yeah, agreed. Thank you, Nico, for the coins, much appreciated. We've got another request actually to look at euro yen, so we'll do a quick look at that. We'll just go back to FX very briefly. Let's take a look here. So euro yen, this is the daily chart. Again, quite difficult with some of these yen pairs, given that we saw that pretty dramatic move in early December. But for me, it looks like it maybe is in the process of forming a top. I've got a line drawn on here, which I've highlighted as where I'd potentially like to get short. That's at 143.86. So it certainly is on the front foot at the moment, following this bullish candle that we posted on the 4th of January. So yeah, I mean, looks pretty choppy at the minute and no real sort of defined trend. But for me, it looks like we maybe are in the process of forming some sort of top at the moment. So I've highlighted this 143.86 as a level to potentially think about getting short. If we take a look at the intraday price action, just to see if there's anything going on here, we can see from the volume perspective that it's kind of building around here, a lot of chop going on. We have seen prices accelerate to the upside. Of course, we've got this major resistance here that we can look at, which is the previous high from the 28th of December. And if we scroll back to the left-hand side, we can see some other resistance levels that may be lining up with this as well. A number of kind of key lows around this region here, around 143.10, which may prevent prices from moving to the upside. So I think, for me, I am looking to maybe sell into strength of this one. If you did want to play it today in some direction, then maybe looking to buy into these kind of resistance levels might be the preferred strategy. But for me, there's no real clear direction on this just at the moment. I'm waiting for better levels to think about doing anything on this for the time being. Okay, let's move on to the gun to the head trades then, shall we, Steve? So this is where Steve and I pick trade ideas live on the stream. As if we had a gun to our head, what would we trade right now? Each of the ideas that we come up with must have stops and targets. We publish them straight to our TradingView profile, which you'll be able to find at signal_center. And we're also placing these trades live now as well, using our account. We've got a £2,000 account that we've started off with. We're risking 1% of capital each per day. And the idea is that we can hopefully demonstrate some decent trading from that and turn a profit over the course of time. We've been running this hypothetically for a couple of years now on a simulated basis, and it's done very well. So now we're in for real, only with obviously a modest amount of capital. But let's see what we can do. So yesterday, Steve, we had a couple of trades. As always, we were selling Aussie CAD, and you were looking to buy natural gas, both of which were actually on side at the close. So I was up 0.51R and you were up 0.25R, and our account balance from the starting point is now at £2,023.50. So we're up just over 1R since we started going live. So let's hope we can remain in positive territory and pick another couple of winners today.
Yeah, nice one. So yeah, looking at the account here, I'm just like going through. Have you got one ready, Joe? Or I mean, I'm sort of ready with mine.
I can pick one, yeah, but you go if you've got one ready. You've got the screen.
Yeah, so I've got Aussie 200 really on the hourly chart, short-term double top, broken through the neckline. We're retesting it at the moment, and because I'm a little bit bearish towards the indices, or they're showing. I mean, for me, it's not really the ideal time. We've still got a long way to go during the day, but overnight we've got off to a sort of like a weak start. It's just whether we recover from this weak start or this weak start continues throughout the day. So for me, I'm looking at one of the real sort of like formations that I like, double tops, is on the Aussie 200. So I'm going to go short of here. We're retesting the neckline, so it's a good level. I'm going to keep the stop pretty tight. It's about a 30-point stop. Getting short here at 17.96, stop at 71.26, and targeting a move to 50% Fibonacci retracement of the overall move, which is, I mean, not that I really look at 50% a lot of the time, but I think it's a nice risk reward. 3-to-1 is a nice risk reward, and we've got some support around about that 50% area. So yeah, a lot of work to do to get that to trade that during the day, or to sort of like hit that target during the day. But I'd like to. I think we could see it stalling ever so slightly around these levels. So I'm going to create an order now to get that going.
Okay, I'll give you a chance to get that on, Steve, and then we can go through my idea today, which I'll start talking about. It's looking at actually US dollar versus the Swiss franc. So if you cast your mind back to when we spoke about the dollar index a little while ago, we saw that it made a new low yesterday, taking out the major support that we had. Looking at dollar Swiss, so I had a look at this last week because it was kind of setting up very similar to the dollar index. It was the chart that I found that replicated the dollar index the best. It was breaking out of a wedge formation, looked to be heading higher. I made a little bit out of that personally, but then it has pulled back pretty aggressively, posting this engulfing candle that we saw on Friday, and prices have continued to move lower since. So we've challenged these previous lows at 92.00. We're pretty much sitting on it at the minute and look poised potentially to break down further on this one, in line with what the dollar index has done. So if we take a look at the intraday charts on the 1 hour, we can see that we formed some sort of double top here. So we saw a top from the 3rd of January, and then we revisited that on the 6th. We've now broken down through the neckline of that pattern, and looks as though prices are attempting to head lower. We're also below this major level of support here that we've got on the intraday charts. If we take a look at the volume profile, we can see that a lot of the transactions have been done in this kind of region over the last 20 days. So this is adding some pressure, suggesting that this may now act as a resistance. If we take a look at price action over the last few hours, we can see that prices has rallied into this newly formed resistance level and now rejecting that and moving lower. So I want to sell that at market, Steve. That's dollar Swiss. It's currently around 68.75.
Right,
so hopefully you can get that on as close as possible for me.
I'll do my best, Joe, but obviously I was more interested in what I was doing. So
Oh, you haven't done that yet.
no.
Your order filling skills need brushing up, Steve.
Oh, they do, mates. What am I doing here?
Selling dollar Swiss.
Okay. So let's create a new order, market order, selling dollar Swiss, and we're 1% risk. So we
Stop loss
are
at 92.30, if you don't mind.
92.30. Oh, 92.30.
And my target is actually a measured move of this double top that I've highlighted, which comes in at 91.23.
Okay. That looks good enough for me, mate. That's risking £20.19. So let's go ahead with that. Selling dollar Swiss, that's on.
I see that.
And yeah, so just to sort of like show you the trades that we've just got on here. Oh, what are these? These are just like little reminders.
Notifications. Yep,
Yeah,
so we're on.
we're on.
Okay.
We're in there.
2.58R is the risk reward ratio on that trade today. We'll get these published up as well on the TradingView profile. So if anybody wants to check them out, they can do so here at Signal_Center. You'll see our trades from yesterday and the previous days. And hopefully we can have another successful day on that today, Steve.
Yeah, lovely. Brilliant.
Okay, right, day ahead. What have we got on the calendar that we need to be aware of? So 2 o'clock, we've got a Fed Chair Powell speech. So that could impact anything linked to the US dollar quite dramatically. Obviously, markets are on tenterhooks about what he has to say and what he's going to do with regards to interest rates. We're talking about a 25 basis point hike at the next meeting. Some have indicated it may be higher at 50 basis points, but we'll have to wait and see. Overnight, we've got Australian inflation data that comes out at 12:30 AM UK time. So if you've got any Aussie exposure or commodity exposure, do be aware of that number later on. And then it's all eyes really on Thursday's number, which is the US consumer prices, which has pretty much been the biggest market moving number of recent times. So let's see how markets react up to that figure. Of course, we'll be back tomorrow and on Thursday morning to give you previews ahead of that. Okay, that's it from us, I think, today, Steve. Thank you very much for watching, everybody, and we will be back in the morning.
Lovely. Cheers.
Cheers. Bye-bye.